Danny from Wicked Cool Finance here. Now please like this video and subscribe to my channel. Now, how do you invest in stocks? We're of course going to cover that. In addition, we're going to cover some other things as well. We're going to cover where do you go to buy stocks? Should you go it alone or should you get some help? We're also going to cover how much money can you make when you buy stocks. In addition to that, we're going to cover when you do go to buy a stock, what are some things that you should look out for? All right, what is a stock? Well, stocks represent ownership. If you were to buy a stock in Disney, it's kind of cool. Let's say you buy a couple shares of Disney, you can actually say, yeah, I'm part owner in Disney. Or maybe you buy a couple shares of Microsoft, and you could absolutely say, yeah, I'm part owner in Microsoft. A small owner, but nonetheless, part owner. Now be careful, because when you do own something, whether it be a house or a car, let's say you own a car and it breaks down, well, you've got to help pay to repair it. Or you own a house and maybe it gets hit by a tornado or a rainstorm. Well, that could cause you a problem. So if you own part of a stock, you are part owner, and if that company has problems, then you too could have some problems. Okay. Now, where should you go to buy stocks? Should you go it alone or should you get some help? Well, let's first of all talk about going alone. All right. An easy way to buy stocks for yourself, a very inexpensive way. In October of 2019, the world changed a bit as it comes to buying stocks. In October of 2019, E-Trade and Schwab and a couple of other discount brokerage firms said, hey, if you want to buy stocks with us, there's going to be no commission. It's going to be free. So a couple of services that I like, that I think are a little bit more user-friendly to buy stocks with are E-Trade, Robinhood, Fidelity, and Schwab. And it's super easy. You just hop on their website, and you can go to schwab.com or etrade.com. You hop on their website, you set up an account, and you can easily link your bank account to the brokerage account so the money can go back and forth, and you're ready to go. But let's be realistic. The idea of buying and selling stocks is a little complex. And I recommend in the early stages, I think you should find a financial advisor to get some help in the early stages. Maybe not forever, but certainly in the early stages. How do you find a financial advisor? Well, there's a couple of ways. To start with, you can find somebody perhaps at your church or in your neighborhood that has a financial advisor and get a recommendation from them. If they like them, they're probably pretty good. Or most mid-size and large banks in the United States today have financial advisors that work in the branch, and you can walk in, maybe develop a little relationship with a financial advisor and get some help. I think that's a little bit of a better way to go in the early stages. How much money can you make when you buy stocks? Well, the S&P 500, what is the S&P 500, by the way? The S&P 500 is an index, a group of the 500 largest companies in America. It's the Standard & Poor's 500, S&P 500. Well, the S&P 500 over the past 20 years has averaged a rate of return of about 10%. That's pretty solid. So if you were to put $5,000 into the S&P 500 and then add $100 per month for the next 20 years, then you would have about $105,000. That's a lot of money. If you were to do the same thing, $5,000 initial investment and then $100 a month for the next 30 years, then guess what? You'd have over $293,000. Pretty cool, right? You too can play around with this. The way that I got those numbers from the NerdWallet investment calculator. And below in this video, you'll see a link to the NerdWallet investment calculator where you can plug in some numbers and see how much money you could make. How do you make money in stocks? Well, obviously, hopefully you buy the stock low and the stock rises over time and you can sell it and you would make money. But the much better way to make money is to buy and hold. So put some money in a couple of quality stocks, one or two, and buy and hold and let it go for the long term. And what happens over time is larger companies typically pay dividends. Well, what's a dividend? Well, you own part of the company, right? And hopefully that company makes a profit. Well, when companies make a profit, they pay out that profit to the shareholders. And that payment is called a dividend. And you can actually set your account up to where you can have the dividends reinvest back into the stock. So let's say you own Disney. Disney pays a dividend. And when that dividend goes into your account, the account will automatically buy more shares of Disney. And that's a fantastic way to make a bunch of money over time. We call that, when you reinvest your dividends, we call that a DRIP program, dividend reinvestment program. Okay, how do you pick a stock? Now this is where it gets really, really important. So chime in here. One of the most famous investors of all time is a guy named Warren Buffett. Warren's often said, buy what you know. Buy what you understand. Okay, so you can buy things like General Motors. You can buy things like Disney, things that you know and understand. And make sure that when you buy those companies, they're companies that have been around for a while, that are stable companies, okay? And remember, stock, you own part of that company. If that company goes down, your money will go down too. And beware, understand, stocks are risky. Many people will go as far as to say, only invest as much money as you can afford to lose. I think that's a bit much, but make sure that you're careful. For instance, some of the biggest companies have had big problems in years past. General Motors, in 2009, General Motors, believe it or not, you know them, they make Chevys, they make Cadillacs. Back in 2009, General Motors actually filed for bankruptcy. And one of the largest financial institutions in the world at the time, a company called Lehman Brothers. Lehman Brothers back in 2008 filed for bankruptcy, almost took the whole United States with it. So be careful. Let me show you a little trick though, okay? And this is not that complex. It sounds complex on the surface, but I'm going to make it real simple. And that is a thing called the PE ratio. Pay attention to the PE ratio. How can you find the PE ratio on a stock? Okay, well, any of those services that I mentioned, E-Trade, Schwab, Robinhood, they all have, Fidelity as well. On their research tab on the website, they all show the PE ratio. You also can find the PE ratio on CNBC's website as well. All right, what is the PE ratio? It is better known as the price to earnings ratio. All right, let's simplify it. Let's say I had a company and I made $1 million a year. What would you be willing to buy that company from me for? Would you be willing to buy that company from me for $1 million? Well, I'm not so sure I'd sell you the company for $1 million if I was making $1 million. I think I'd just keep it. Would you be willing to pay $2 million for my company that makes $1 million? Okay. Well, maybe you would be willing to pay, maybe I'd be willing to sell it to you for $3 million and you'd be willing to pay $3 million. So the price is $3 million and the earnings, what are earnings, by the way? Of course, you own part of the company and hopefully companies make products and they make a profit. That profit is after all of their expenses are paid, that's when you have profit. That profit is called earnings. All right, so back to our company. We've got that company that makes $1 million a year and you're going to buy it for $3 million. So the price is 3 divided by the earnings, which is 1. So the PE, the price to earnings ratio, is 3. Okay? Well, let's go real life and talk about what is it really like in the stock market. Well, as of the filming of this video, and it's June of 2005, believe it or not, Tesla's price to earnings ratio today is 179. Let's bring that home. Is that crazy? I'm not so sure. That would be like you paying $179 million for my company that makes $1 million. Seems kind of crazy to me. I mean, Tesla's a good company, but you got to be careful. Stocks can be risky. Microsoft, for instance, Microsoft's price to earnings ratio is 36. Great company, right? But again, that would be like my company that makes $1 million, that would be like you paying $36 million for my company that makes $1 million. Okay, back to it. Be careful. Buy what you know, buy established companies, and buy cheaper companies. And as they say, buy low and sell high. Now, if this is too daunting, if you think, this sounds a little bit too complex, then I would suggest probably starting with a financial advisor as well, and dipping your toe into either a mutual fund or an index fund. You actually can buy the S&P 500 index fund, again, which is the 500, it's comprised of the 500 largest companies in America, and that's a great way to get started. All right, I hope you learned something here. Please like this video and subscribe to my channel, and I'll see you on the next one.